Alright everyone, today's stock is RBLX. I saw it was trending last week and I decided I'd go and figure it out and see what was going on. So we'll do three things. We will look at the latest earnings, we will look at the current valuation, and we will look at a few other things to consider, whether that be upcoming catalysts or insider buying or selling, total share float, things like that. Let's start out with saying what this company even is. And then remember, this is kind of a discovery channel. I'm not trying to be bullish or bearish. I just kind of look at the stocks and see what I can learn. So let's see. Platform for connection and communication. Create, play, work, learn, and connect with other experiences and global community of creators. It's like freaking Reddit. What is this? 3 immersive experiences, build, publish, or 3-dimensional immersive experiences and content. Okay, like content creator, connector, or whatever, something like that. Yeah, okay. All right, well, let's look at the numbers, which is what I like to see. And so this is for Q1 2026, and it was released just a couple of days ago. So we'll see what the deal is and kind of what's going on. I'm going to start with the revenue. Let's see. We can see growth year over year. It's not necessarily quarter over quarter, which is sometimes what people care about, but you're still growing. The cost of revenue did go up, maybe about the same percentage-wise as it grew. Though, looks like, to be honest, it looks like the revenue grew faster than the cost of revenue did percentage-wise. And then, let's see, the developer exchange fees grew quite a bit. Infrastructure, trust, and safety grew quite a bit. Research and development grew a little bit, and G&A almost doubled. And then you're looking at sales and marketing, which percentage-wise did go up, but they're not spending a lot on sales and marketing. So to get this much growth, that's pretty good. And then you're looking at the total costs and expenses, which definitely went up. And then your loss of operations actually got worse year over year. And we could check quarter to quarter maybe later. So you're looking at it's grown the loss, year over year. And you're looking at a net loss of 35 cents a share. I want to see, just for comparison real quick, I want to see what the case is. Oh no, they've never turned a profit, it looks like. Net profit. Nope, yeah, they've never made money yet. So, something to look for. It is growing though, look at this. Almost doubled 2020 to 2021. Grew. So it's growing, and it grew a lot 2024 to 2025. So that's something. This net profit seems to kind of got worse. It got worse here, and then it kind of has flattened out since 2022. So all right. So since we know that now, we got to look at the balance sheet, because we got to see if they're burning. Well, if they have a net loss of 246 million every quarter, how much cash do they have before they run out? A lot. They got a lot. Yeah, 3 billion here. So they could go what, 3 years before they'd have to raise more cash, unless they got some sort of big capex thing they're about to fund. And we should check this long-term debt too. So right here, we're checking here that long-term debt is about a third of their total cash position. They got some of these lease liabilities. But I'm checking, they got their deferred revenue, but not anything. So yeah, just this long-term. Oh, they got some other long-term liabilities here, but it's not much. So if you take away their debt, you got 2 years before they run out of cash. But I know it's not always that simple, so we're just gonna look at the statement of cash flows real quick. Okay, here we go. And what do I want to see? Cash flows from financing activities. I want to see proceeds from issuance of stock. Not a lot. Okay, so not a lot of dilution. So that's good to see. And it looks like in investing activities, they're spending a lot of money in. Oh no, that's just the short-term investments. It's nothing there. Maturities of investments, so not anything super interesting there. But you can see the net cash here provided by operating activities grew year over year. I want to see if there's anything. Oh, look at this. There is this stock-based compensation. So they are diluting that way because they're giving free shares out as salary. And I doubt they're doing buybacks to offset that. Okay. So my takeaways for at least this part for the kind of latest earnings is that we're looking at growing revenue definitely, but you're looking at about a flat net income over the past 3 or 4 years. 3 years of cash before they run out of cash. Only 2 years if you want to exclude the debt, the net debt position. Is my camera freaking out? Is it still on me? Yes. It's kind of off. Yo. There you go, guys. Let me fix that for you brothers. So then this is that's kind of my takeaway. So let's look at the valuation. And I'm gonna see, is it still doing it? It's fine, whatever. Okay, so we're gonna see this market cap of 32 billion. So that is high, considering that they're not making money yet. But this market cap must be related to or be comparing the sales to equity because their sales are quite a bit. So that must be the consideration. These shares outstanding, there are quite a few shares outstanding. 700 million. The higher the number this is, the more difficult it is to move the stock and the lower earnings per share that you get. So, yeah, that's kind of the valuation. And so I'll ask you guys, I don't think in this case, I don't think it's fair to ask, do you need $32 billion to, lose the net income that they're losing? But it may be better to ask, do you need $32 billion to make, $5 billion every year, and to have that growth? So, yeah, what do you guys think about what do you think about that? Let's see. I want to check a couple of other things here real quick. I don't know that this is going to apply, but what is the PEG ratio of RBLX stock? Okay, so 5.6 and then negative P ratio. So yeah, maybe this isn't the best example. I want to ask, what about the ROC? ROC. No. Nope, I'm sorry. ChatGPT, sorry, I meant. Yeah, this is better for PEG. So negative 15 to negative 25%. So that's not great, which you would expect, but okay. What plans does RBLX have to become cash flow positive? Sacrificing to build much bigger platform. Okay, so they're investing into growth, pushing into 18-plus-year-old users, spend more money, expanding globally to more core gaming experiences, higher monetization per user. I'm gonna see AI creator tools. Okay, whatever. Yeah, so this is the problem, is that they have a lot of this stock-based compensation, which we saw in the statement of cash flows. There's a lot of that. Um, what? Well, how about this? Are insiders buying or selling the stock? Okay, so heavy selling, and then are there any catalysts for this year? Okay, advertising rollout. Oh, this could be big. Advertising platform, so that's maybe something. When does that happen, I wonder? Look at that. Older user growth, sure. International expansion, sure. Safety, yep. I want to hear about the advertising rollout. Yep. When does the advertising rollout take place? Okay, so they already have some ads and billboards and brand experiences. Big shift is happening now. Some ad placements. So you'd expect some more spending in the ads, which we did a little bit. Okay. So they're adding to this. So my takeaway on this, I mean, and right now you're looking at, below 50-week moving average and 28 moving average. I should ask this too. What is the short interest on RBL stuff? Okay, pretty low. All right. So then my takeaways on this guy from what I'm seeing is that you're looking at a company that is growing rapidly, that there's a lot of stock-based compensation that's offsetting the free cash flow. They do have 2-3 years, whether you include that or not, of cash runway. And you're looking, oh, you know what I should ask too? What does the MAU growth look like? This is users, monthly average users. Strong long-term MAU growth, but slowing more volatile momentum in 2026. Expand year over year, 15 to 20%. Because this is a big deal. For a company like this, I bet this is a big deal. So it's growing, maybe a little choppy. So yeah, that's something to watch. And then another thing is that they're doing they're going into advertising and rolling into that. So, and then you're looking at a market cap of 32 billion, sales of 5 or 6 billion in last year. So interesting. This is basically my first look at this. So if you have more opinions or something that I missed, please let me know. I'd love to learn more. And then I will see you guys in the next